In terms of top-line revenues and bottom-line profits, expectations below par. People are talking about pressure points from diamond banks, asset quality. How do you explain some of these figures?
Okay, thank you and good afternoon. We'd like to say for a start that the top-line numbers are not actually as bad as is being reported. Because if you look at the gross revenues, yes, there is a decline of about 17%, but I would like to draw your attention to the fact that the interest regime in Nigeria between 2010 first quarter and 2011 first quarter has shown a dramatic reduction. So I'll be surprised if any institution actually records a significant growth in terms of what you may call the gross revenue. But if you look at our operating performance itself, you will recall that our net interest margin is a very healthy growth of about 15%. And if you look at the net operating performance for the quarter, it's actually in the region of 30% upwards. What had dragged into our performance was the challenge that we faced with the provisioning that had to be done. And in this particular instance, what we have done is to begin to look at the provisioning required for disposal of our subsidiaries. And in this case, we've taken about 2.5 billion in that respect, and another 2 billion in terms of other provisions that will be required. Half of that will be in terms of general provision. I'm sure you recall that the Nigeria Accounting Standard Board had recently insisted that we need to make our 1% general provision, which was waived in the first in the 2010 financials. So for Diamond Bank in particular, we expect to be able to do 4 billion in general provision by the end of the 2011 financial year. But if you look at the performance of the institution as a whole, our first quarter profit in terms of operating profit is about 4.9 billion. I mean, from 4.9 billion of last quarter, same quarter last year, to about 6.4 billion in this quarter, showed that year on year we've actually grown our net operating performance by 30%.
Those high provisions that you refer to, particularly with the forthcoming sale of the subsidiaries, obviously that's reflected. Going forward, where's the growth going to come from? Can you just give us a sense of what strategies you'll be employing?
Well, I mean, fundamentally, the health of the institution is very sound to the extent that we have up to about 75% of our deposits in the low-cost zone, where we have a current account and savings account, and only about 25% in purchase funds. So we are very comfortable that going into the future, we should be able to do some decent business in that area. Now, if you then look at the risk asset side, traditionally we've been doing quite a lot in terms of retail growth in that area. We've moved from about 5 or 6% of our total loan book in the area of retail up to about 9% as at the end of our last financial year. We've moved up to about 27 billion. Now we're hoping to grow the retail business a lot more into the future. But you know that retail growth is supposed to be an organic growth, and we don't expect any major losses in those areas. Now, between the deposit mobilization from retail, which is about 50% of our deposit, and the utilization of our loan book in the retail space, there is a gap. Now, that gap, we will intend to channel it back into the corporate sector and be able to make some decent return, where at least we can get something more than what we get from the corporate and government securities. Decent returns, obviously, that's what analysts are concerned about. Recovery of rates of earnings going forward. What are your targets for 2012? Well, we believe that the use of AMCON is going to come here very handy. You recall that in the course of last year, we did about 11 billion, but essentially that is in relation to capital market exposure. As we go into this financial year, we've already submitted somewhere around 20 billion naira worth of bad loans to AMCON, and we believe that will take us in terms of our ratio from about 14.4%, which you saw in our quarter one results, down to below 10, somewhere around 8% actually, we should be able to do. And we believe in the third quarter, and certainly before the end of the year, we want to do another 20 billion, and that certainly will take us further into a lot more comfortable zone, because there is a limit now of about 5% in terms of how much NPL any bank will be allowed to keep going forward.
Let's talk about the sale of some of your subsidiaries. It's reported that you'll be selling off your insurance business, your stock brokerages, your investment banking subsidiary. Can you shed any light for us right now as to which businesses exactly you're planning to dispose of, and just give us a sense of how advanced those plans are?
Okay, thank you very much. We've actually made a lot of progress in that direction. We have started to incorporate our diamond mortgages back into the bank. So as we speak, the 2.5 billion that you saw in the financials of the first quarter relate to the rolling back of the diamond mortgages back into the institution, and that has been closed. The insurance business as well as the pension business is now at an advanced stage, of negotiation with our counterparties. We would like to keep those names confidential at this point. And the securities and the registrars, we already have the FA looking at those institutions, and they're already making contacts with potential investors. So all in all, we believe that by the end of this quarter, which is quarter 2, we will have done a significant, if not all of the disposals, and certainly by the end of the 3rd quarter, we should be all done. So that when you now look at our financials come December 2011, you'll be seeing the performance of the bank essentially drilling down into that of the group.
And finally, let's just ask you about your relationship with AMCON as Diamond Bank and how you're going to comply with new regulations introduced by the Bankers Committee in the last week. I mean, your non-performing loan to total loan ratio is somewhere in the region of 14%. The CBN feels that it needs to be at 5%. So firstly, how are you going to comply? And then secondly, how are you going to work with AMCON in terms of selling off some of the bonds into the market at a bond yield right now, the price of about 11.8%.
Okay, well, we have to decouple your question into about 3 sides. For a start, we are already working with AMCON to take about 20 billion from the ratio you have just explained. So that will take us from the 14.4% down to about 8%. That's the first step. The second step will be to do another 20 billion maybe in the 3rd quarter, and that will take us down from 8% to below 5%. So we do not see any challenge in being in compliance. And in any case, we are likely to even grow the loan book in the course of this financial year, maybe to about 400 billion, and therefore the requirement to be within the 20%, the 5% will be significantly achieved. Now, the second part of the question had to do with what happens to the bonds. Well, that is a systemic issue, and I do know that price of bonds versus interest rates has been a challenge in the system because of what had happened, I think, about a year ago, when quite a number of bonds were issued by the federal government at rates that are now looking not very economical and not very profitable. In which respect, if the central bank begins to do mark-to-market, we suspect that somewhere around 600 billion naira may be the kind of figure that the industry itself as a whole has to suffer. But the good news for us is that as an institution, our portfolio that we held for trading is not significantly affected by this mark-to-market, and we do not see any impact at all in terms of negative effect. However, the portfolio that we are holding to maturity, those ones will have some impact, but the good news about being held to maturity according to accounting standards is that you can just pan out the time. So between now and when they mature, which can be anywhere between 5, 6, up to 10 years, then of course the impact on any particular year will not be significant. Let me use the opportunity to actually let you know that we have a new management in place, and this new executive is likely to begin to put behind us all of the legacy issues by the end of this financial year, and we look forward to a 2012 where we can return our profitability to some significant level of expectation, anywhere between 15 to 20%. I think that's the kind of number that we're projecting for 2012 and beyond.